Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. And before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
All righty.
And I'm going to share my screen here. As I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it, and he'll read them back to me. And to give you guys a couple minutes to put those questions in, we'll start out taking a look at the pre-market report, see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. Okay.
Sounds good.
So pre-market report, these are stocks trading in the pre-market hours. On top, we have this calendar view that allows you to go back in time if you wanted to see what happened in the pre-market on a historical date. So far, today, January 3rd, we see we got 310 stocks that are trading higher in the pre-market, 595 stocks trading lower. As far as volume goes, we have 102 million shares trading on up volume, 258 million shares trading on down volume. And if we convert that volume to dollar value, we have $607 million worth of stock trading higher versus $3.3 billion worth of stock trading lower. So from a high level and this perspective, it looks like the trading in a pre-market hours is trading with a bearish lean. Okay, so some bearish sentiment. Let's move down and see if we could take a look at what's going on from a couple more perspectives. Then we'll move on to the questions. If we scroll down to the middle of the page, we see that we have a list of stock symbols that are trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers in the pre-market hours, and biggest percentage decliners in the pre-market hours. And to make this list, we do set certain thresholds for liquidity, price moves, volume, and so forth, because things in a pre-market can be very illiquid. You could have just one share trade. So what we see so far is that on our biggest percentage gainers list, we had 46 stocks that made that list. In our biggest percentage decliners, we had 154 stocks. So that also indicates that the trading in the pre-market hours has a bearish lean. If we take a look at the list, we do see that there are small cap stocks in here. These are the market caps. We have ETFs, leverage products, could be preferred, closed-end fund. Any security that's traded on a major U.S. exchange, if it meets those liquidity thresholds, it could make it on this list. And to narrow down to a smaller group of stocks, we could use the filters above. So if you have a watch list, you could filter by your watch list. I'm going to use this filter in ETF. And when I click on it, get a drop-down menu to choose from. Let's do SPY. That's the S&P 500 ETF. And when you click on that, the list below gets filtered by stocks that are holdings in the SPY ETF, and which are the S&P 500 constituents. And the ones that made our biggest percentage gainers list, over here we see there are 3 of those, and 20 that made our biggest percentage decliners list in that group. Again, that also points to a bearish bias in the pre-market trading. So far we looked at it from a couple different perspectives, and it looks like, at least at this point, the sentiment, the trading in a pre-market hours, all is kind of pointing to a negative potential opening. So we gave it a couple minutes, Will. If you have some questions, I'll take the questions now.
We did have a question. I already answered it online. They asked for a link to the webinar. Someone was having problems signing up for the IBKR webinars. So the first link is to the next webinar that you're having, Options MultiLeg Trade Screener.
Yep.
And then Interactive Broker does a really good job storing all the webinars and displaying them. So I sent the link to the entire library of IBK webinars that you've done. So it's all there in the YouTube chat for anyone who wants to click on it. That was the only question that popped up as of yet.
Okay, awesome. Yeah. So we will be doing a webinar next Tuesday on multi-leg options trades, that are trading in the market, in the the actual trades in the options. And that will be next Tuesday at 2 p.m. Eastern. It's going to cover a new tool that we will publish right before the webinar. So that will be the first webinar introducing the new tool. And it's going to be focused on the multi-leg trades and strategies. And just to give you guys kind of a preview, since the question came up, is if I go here on under options and under options volume, what we see here is the list of symbols here. These are some stats, and let me just switch this to volume mode. Right now it's on dollar notional. Let's go to volume mode. And as we could see here, this is the number of options that traded yesterday. For example, in Tesla, we have the 90-day average. So we could see here that on a relative basis, it traded 75% of its daily average. And then, there's a split between the call and the put. So we see percentage of the 43% of the volumes in the put. But within that volume, right, within the option volume, this is a total value. But the questions will become, well, what happened? We got this number, and there's 1.6 million contracts traded, and that is just letting us know the total volume, but it doesn't really tell us what people were doing, how were people using options in Tesla. It just tells us a quantity, right? That's it. And we could compare that quantity to daily average, and then it'll tell us on a relative basis if that quantity is high or low. But it doesn't go underneath the surface and explain to us, well, what are people doing? How are they using the options? Like, what type of opinions are they expressing potentially in the options market? We don't know that just by looking at that number. So to dive in deeper, we have to go and analyze those trades. And, one of the problems is you can't really do it manually. How do you, go in there and try to pluck out 1.6 million contracts, and analyze them manually by hand? Each one will take you forever. That's why we have machines and algorithms and software to help us out. So when we come over here, then we get a little bit more of a breakdown, right? So then what we do is start from the high level and start breaking it down. And, now we got a little bit more information, right? So that's what we're doing, taking the volume and working from the top down, getting more insights. So, we do see, okay, there's volumes and calls and puts, and there are more calls traded than puts. But again, it's not really enough to let us know how people are using those calls and puts. We have to keep going and analyzing it further down. So another breakdown in the volume is that we could look at how were these orders and trades executed, right? So 81% of all the trades in the options were single leg trades. It was either, a call or put. That's it. Entering in buy or sell of a call, or buy or sell of a put. Right. So that's 81% of this volume. 19% over here in Tesla were entered in as a strategy, some combination. So they didn't want just, execute a call or put and then execute this or execute. They needed to have a certain strategy that had to be executed simultaneously or not, right? So it's either like a call spread, right? So a call spread, you need both legs to get executed simultaneously at a certain price, but or not get executed, but they don't want partial, right? You don't want one leg and not the other. So those are the multi-leg trades, and you guys could enter them now. You have straddles, spreads. Some use butterflies. I know I talk to people who have all kinds of strategies. Vertical spreads are very popular. And you guys sent me like some very fancy ones. That even I had to sit there myself and think about, because there's an endless combination of options really that you could try to do because you have so many different options, right? So that's 19%, and then we have some contingent trades which have tie stock into it too, right? So it's not just options, but it's contingent stock. It could be even something perhaps different even than that, but it has more than just the different legs within the same underline, different option legs within the same underline. So what we're going to be focusing on then is, we could break down each one of these. Each one of these we're going to break down to analyze. And what we're going to be focusing on the webinar are these, the multi-leg trades, right? That's what we're going to be focusing on in this upcoming webinar. So you can see here 37, 34, 30% Alibaba. And I'm going to come down here and just show you guys something. So if you come down here, if we took the volume, all the volume that traded yesterday in the options markets, right? And we just broke it down just like we were talking about by what percentage of all the volume was multi-leg trades, what percentage were single leg trades, what percent were contingent trades. We could see here how important these multi-leg trades are because we're approaching almost half the volume. On a daily average, this is what we see around 45%. If you add contingent trades with it, which is also it's an execution of a strategy. Almost half the volume right now, and it keeps growing, is a strategy, not just entering in simply a call or a put, but people are starting to use options to express different outlooks or different aims, different targets than just simply, buying a call or buying a put or doing it just for direction. And when we're going to analyze it, right, when we're going to look at it, that's what we're going to start diving deeper into. Well, let's concentrate, because we could analyze all these separately, but we're going to concentrate on analyzing these multi-leg trades. Okay, that's what we're gonna be doing in the webinar. And not only are we gonna do it, but when we take these multi-leg trades, right? This is the hard part. when we start analyzing these multi-leg trades, the difficult part is that, and I'm going to go to the option block trade screen. Here's the difficult part. I'm going to do trade condition, multi-leg trades. Right. So these are like multi-leg trades that had, somewhat big volume yesterday. So just over here, that, tens of thousands, and they appear like this. If you look at the trade tape, they just tell you, here's the details for one leg, here's the details for another leg, here's the details for, so they appear really almost like a normal single leg trade, except you see this condition, multi-leg. All right, so this is the indicator that this is a multi-leg trade. All right, well, here we're looking at it, we're eyeballing it, but what kind of insights are you going to get unless you really know how to analyze this yourself? And even if you do, say, oh, okay, well, here's a QQQ, here's a put spread right here, 1,000 lot put spread here, here's the bid, here's the offer, and then you could go and analyze that one yourself. Now, and I'm just eyeballing, right? So that I'd have to like really go in deeper and like look at other stuff. But when you're doing that, how are you going to do? Are you going to eyeball all of these? That's like how are you going to really figure out what's going on? And doing that manually, even if you have access to this data that we provide, but doing it manually and eyeballing, trying to figure out what's going on, that's a hard endeavor. I mean, so I would say it's impossible, right? Especially like, what if the strategy is 3 legs or 4 legs, or there's other stuff going on in there that I'm not even able to capture. So that's what the new tool will do for us. It's going to algorithmically take all these inputs, all the different multi-leg trades, right? It's going to look at all the details that we're throwing in there. And then what the tool will do is say, well, here are the different strategies people are using. Here are the different strategies people are using in Tesla. Here are the strategies people are using in SPY. Here are the strategies people are using in QQQ. And this is how they're trading it. So that's what we're going to be talking about in the next webinar, coming up Tuesday with Interactive Brokers. Okay. And it'll list us the top strategies, by volume. And then we could just kind of go down and see, how these things traded, how many times, what price levels and so forth. And we'll talk about the importance of it. Why do we even care? Like, why is it important for us to look at it, to analyze it, and to understand it? We're going to be discussing all that on the webinar. Okay, so that's coming up on Tuesday with Interactive Brokers, but you do have to register with them because they're hosting it, right? It's going to be on the Interactive Brokers platform.
Very exciting, D. Thank you.
Yep. All right. So, and what we're going to probably do is start it from over here, maybe, and then, allow you to choose a particular, symbol from here. Maybe I'll add some filters in here and move on from here to the breakdown of those multi-leg trades. Okay. So this will have more of, a better grouping and interpretation and so forth, to make it easier and quicker for you guys to be able to analyze it and understand and research it. All right, so that's what the multi-leg trades, and I don't know if there was a question, but just wanted to let you guys know what's coming up.
Yeah, no, that's perfect. I mean, there was a question about the interactive brokers, and we're very fortunate to be able to
Yeah,
do the interactive brokerage webinars, and I appreciate people asking, but they do control the webinar, and it sits on their
yeah,
site, so you do
yeah,
have to register. So everyone has the link now, and DB's registered, so all's good.
yep. All right. Well, I guess we don't have that much time left. If there are no questions,
You know
well,
what? We did question that someone asked yesterday. How do you go back? They were asking particularly, I think, and Rob's on, maybe he'll remember. It was like January and February or February and March of 2020. He wanted to go look at the IV. What did the IV of the straddle in an SPY do? Is there a way to look back at
uh,
historical IV that far back?
yeah. Let me see. So here are on SPY. Let me see. Under volatility, we have the implied vol. So let's go back. What, 3 years was it? Or it's already longer, right? 5 years.
Shockingly, yeah.
So here I'm going to go back 5 years. And over here, this is a chart of the SPY implied volatility. So when we talk about implied volatility, also you have to define, well, what am I referencing? Which benchmark, right? And this is a 30-day at the money IV, which is kind of the industry standard. As when you just say IV, that's the first IV that people kind of reference, the 1 month at the money vol. That's what the VIX is, right? The 30-day IV. But this one's looking at the money. So this is a line chart of what the implied volatility did over time, and you could see here that, March 20th over here, that's when the coronavirus hit, right? That's where we had the government shutdown, and there was a huge spike right there. It looks like it went above even 60, but that was a very unexpected, unprecedented type of situation. We never even had a shutdown like that for a virus before, so nobody knew how it was going to play out. But this is the implied volatility chart, showing, really quickly, you could visually see that from down here, even in February, you could see that the implied volatility was fairly low, right? 11 point. I mean, we already knew about it. I think of what, in January and December, maybe January, February. Definitely, there were cases already ahead of that were being reported in China, and I think they started to appear cases in America. And you can see that initially the implied volatility was low. It wasn't, until later when people realized that it was spreading much quicker and nobody knew, you know, enough about it. But this is what the implied volatility looked like.
All right.
Yeah,
Perfect.
yeah,
Thanks for sharing that, D.
yeah,
All right. No further questions are popping up.
yeah. So
Rob is actually, sorry, there's a little bit of delay between the two. Uh,
yeah.
Interesting that as volume has grown, volatility has gone down and remained rather stable. I guess he's looking at the chart and seeing that the
Yeah. So what else this chart shows, and that's a good observation, is
nice
that,
observation, Rob.
yeah, very nice observation. So what does this show? That this here is showing us the option volume. Those are the bars that are moving up. And as you could see that in the last 5 years, it looks like, from from down here, you know, that the option volume has started to increase, and it looks like it's, you know, it's bumpy along the way, but it certainly looks and appears that the volume in the options has been growing, you know, if we looked at it like year over year, which I think, you know, is the, you know, we kind of already knew that because that's, you know, those were the reports. But yes, the option volume has been growing, especially in SPY, and some of that may
Do
have.
we know what percent of that volume is actually zero DTE volume? It's got to be a significant amount, right?
Yeah. So from this chart, we don't know, but we could take a look at, for example, on a day-to-day basis. So I'm gonna, and that's a good point because the zero DTs became popular, and there are people who use those zero DTs for specific strategies that they weren't, you know, that without the zero DTs you wouldn't be able to do, right? So those are specific to zero DTs, special strategies. And when we look here, this is yesterday's. So this is yesterday's option volume in SPY by expiration. So here are all the different expirations. We have some stats here, but over here is the volume for that expiration. So you can see January 2nd, 3.1 million options traded on January 2nd expiration. And what percent of that is of the total volume? 45.3%. So we could see that the zero DTEs in SPY, and this is pretty much, you know, typical, you know, bounce around, but this is typical that 40-50%, something like that, are zero DTE options, those that expire same day, right? So that is a big, right? That is a big percentage of the overall volume in SPY, and that could explain some of that growth, you know, that we've been seeing. Especially like those products that offer zero DT. I think maybe what QQQ might have. Let me take a look. I think QQQ also has QQQ. So here's QQQ January. So they also have zero DT, 42%. So that zero DTE expiration pretty much, you know, is responsible for, you know, the biggest single expiration, the volume, the single biggest, right? Because then the next one falls down to 16% and so forth. So it's always at the top of the list as the busiest expiration, those zero DTs.
Yeah, that's amazing.
Yeah. All right, we're right up at 9:30. Well,
yeah, no, we're right up against the opening bell. Actually, the opening bell just happened. Awesome job, D. Thanks, Chameleon, for the questions and for joining. Have a great day. Great job, D.
Thanks, everyone. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.